Good morning. Weekly update of the U.S. grain markets, or I should say the grain markets in general. We'll do some of the foreign countries or global markets as well. Thursday, February 29, 08 a.m. Eastern Time. I'm Rich Paz for Critical Point. Okay, yesterday was suggesting that probably got a level 3 top in corn and perhaps even larger signals that I'll talk about in a moment, something more important, in other words. And for the moment, you can see they knocked it down yesterday. They've brought it back up today, but also having a problem, and it's fluctuating within my model's critical point target and trying to bounce off the 5-day average. And the model's saying, well, this can be a level 4 upswing into tomorrow, perhaps Sunday night, maybe even early Monday. So we don't want to consider that. But the model's also favoring that it's either topped or topping for level 3. And the model has shoved out the earliest date for a bottom and added more time to go down. So it's suggesting a down move like this into this time frame of level 3 trade, at least level 3 traders selling some corn more than buying. Okay, the pendulum is swinging. Now, if those larger trends are topping as well, it means the level 2, level 1 traders that create the bigger moves during the year are also backing off. Demand starting to back off, and supply may start to increase. And I'll talk about that in a moment. Now, if it trades below yesterday's low of 496 and a quarter. I think that's all I need. I'm sure the model will go that way as well, that level 3 tops in place, the trend is down, and even more so if it closes below that price level. Now, we can also do a critical point downside objective that if it takes out yesterday's low, that we want to consider about 490 to about 484, and that's going to concern some people that we've then have stalled or breaking down that larger uptrend, that something's not quite right, losing momentum here. The machine isn't working so well for the bulls, okay? Now, even though that will be the target generated if it goes below yesterday's low, it's not generated now, I'm just running a what-if scenario. But the model is showing, though, when we look at fundamentals and this and that, when we look at the possibility the market has not topped yet for those larger trends, it is a possibility it goes below yesterday's low and just a little bit lower. It might find support around 493 to 495. So write that down as well. That may be all we will get into this level 3 bottom, that the market just wants to try its best to continue to keep some kind of a bullish posture. And then obviously if it trades to a new high for the year, we know we have not found that level 3 top, that's extending. Now that's only in the next few days. If it's it can then go down quite a bit, but if it's like higher, 1.5 weeks from now or something, that's a different scenario that we'll have to reevaluate for those larger trends of just how much longer is it going up. But I think for the moment here, we've seen a nice slug of demand here. It could have been better volume on the future side, but I think it was nice demand. But the best forecast is it's time to back off corn prices. So if we zoom out with the use of the weekly chart, we can see it's in the price target, very wide price target, and get a gold star for that. But it's also in the time frame for level 1 top. Called it, have not seen enough evidence to give a gold star. I need a down week to say, we got some kind of a top there. And I still need to do research on, in fact, I'm just going to do this. We're moving this earliest allowed out to March 3rd. Just don't believe this market will bottom until March, that it's not just going to drop for 1.5 weeks or something right into the end of the month and then take off to the upside. It needs more time than that, okay? And it can stay down the entire month of March, by the way. Now, don't have downside ideas here yet of what we could be looking at, but it might be as severe as coming back to this rather important support level of about 472.5 for the March corn, and also for this continuous spot rollover chart, meaning if it took long enough and it rolled over to the May, it may mean the May has to come down that much, meaning they're taking out the carry and all that fun stuff. All right, at any rate, that's the corn forecast that really ought to be going lower. It's overbought, it's overvalued, but the trend is still up on a weekly basis. It's just the daily starting to slip a little bit here, and we may learn it just backs off a little bit and just up yet again, but I think it's going to top out no later than the week of March 3rd, okay? And I'm still leaning more towards highest price this month, all right? All right, let's move on to soybeans and daily chart, and I believe that we have seen a level 3 top, but it's already rebounding today. And let me double check this is the daily because I did... yesterday I was looking at intraday fluctuations and I did change it back to daily. So that might be a premature call too early. The model's saying this is what looks like a weird level 4 bottom. It should have gone lower than that, then up. But the model's saying there's a good possibility it's bottom for level 4. It's rather early. But if so, it's going higher into tomorrow. It might even go higher into Sunday night to early Monday. But it can also top tomorrow, preferably late tomorrow. So I think there could be a bit more upside, and the might be a bit early here. I'm calling this level 3, but I think there's a good chance, even if they want to push it higher the next week and extend that level 3, that it's not going up by large amounts. I just don't find the global and domestic fundamental reason to do that. And I think, as I look out 1.5, 2 weeks from now, it's probably going to be down. But for the moment, the daily indicator is rather supportive here, and it's kind of saying, the model's saying, you know what, made the call for early level 3, warned it could go higher later. It's looking like it might like to go higher a bit longer here and rebound off that 5-day average. What may be occurring here is just waking up to this level 3 bottom, and the 5-day average is starting of the close is crossing the 5-day average of the opening, which kind of helps us. I've been experimenting this for many years. It's no longer experiment. I do like it. I'm using it. It's not necessarily that important, but it could be telling us of another type of level 3 buy signal even. And the stochastic indicator actually bottomed near the lowest price ahead of the model. So it was actually a leading indicator. And then this was the better level 3 bottom at a little higher price that they beat it up a little too much going into level 3 bottom. But this indicator acting fairly bullish. It's not telling me necessarily that I want to bet on lingering upside momentum the next 1 to 3 days, but it's getting very close to do that. But also keep in mind it's coming near mid-range. That can be a secondary sell signal. So especially if they don't shoot this price up quite a bit and make that indicator spread the two lines, then you'd have to consider it might bump its head there mid-range and come down, and this would also relate to probably limited upside, meaning they're buying it now, but maybe they don't really want to push it much higher than yesterday's high. So I question the upside, but I'm leaning towards more upside, okay? But eventually lower. So what do we mean by that? Well, let's go to the weekly chart. And what I mean by that is I think the market's going lower into the week of March 3rd on into the week of March 17th. I may even learn how to push it even further so it's more like the corn when it can be down all of March, okay? And it's already met the one downside target, but it can go a bit lower on down to about 1016. And then it might even break lower. If anything, all the way down, it could get more dramatic here. Especially if China really backs off from buying from us and Brazil really cranks out the beans and Argentina doesn't get any worse. I think that's too low, but I wouldn't be surprised it goes below this target into about where this number 2 label is. In other words, it tries to stay above $10. In the meantime, it may bounce back and bump its head yet again on recent weekly highs and then down and still be in a level 2 downtrend. And it might bump its head near the old prior target of 1055, a little bit higher, and then still come down. It feels as though, yeah, it is going lower, but nobody is that aggressive. They're not that worried about it yet. The sellers need to come in. I think they'll change their attitude, though, if it goes below the low of this week. I would be concerned the market actually speeds lower, and that low is 1026 on the March beans, okay? So give the bulls a chance. When it goes below 1026, and the bulls are going to feel sorry that they tried to buy a pullback that they should have waited for a larger pullback, okay? Next up, let's go with the wheat market, Chicago wheat. I double-checked with the Kansas, Minneapolis, same patterns, just different price levels. I think the wheat market can rebound today, maybe tomorrow for level 4. I do not believe it's going to a new high for the year. I don't think it's going to take out the high of 621.75 March. Even though the level 3 top ideally is not in place, And so ideally it would go higher than that. The model's picking up less than ideal conditions and trying to be a little bit of a genius and be aggressive here, and I'm all for it. That we've seen the highest price for the level 3 up move. We just haven't seen the true top. The demand isn't over and done with yet. The supply really isn't picking up the pace quite yet well enough. So I do think they're going to bounce it, but it's going to come in. A level 3 top will come in below that price. It's going to be a failed truncated top, a little bit off the mark, if you will, relative to just price only. And then the real supply is coming in, the real drop. What it may be is the supply side is already picking up the pace, and it's the demand that really hasn't backed off enough yet to bring this down. If it will bounce some and then goes lower, what I think we'll do is use the critical point to at least give us a target that's probably going to be looking at 590 or lower for that level 3. It's too soon to do that yet. I'm not going to make that any kind of a official call price-wise. All right, weekly chart, I have to consider it met all of the upside objectives we established a long time ago, and even punched through the highest one and punched through a prior level 1 top. And yet now they're selling it. We're getting a negative weekly reversal. I think we might as well assume, even if the level 3 top's not in place, the highest price has been seen. This market wants to go lower in the level 2 bottom. It's placed a level 1 top, or will at a lower price here in just a few days. I think it's going lower, and I think the prior upside targets could now be downside targets and potential floor prices all the way down to 581. But we do time-wise, I think it's going to take them until March 17th on into April 21st to have sold enough, long enough, and get the price cheap enough. They just don't want to sell any lower. And then the demand side will realize things are tightening up and suddenly look at their own inventory and realize they need to buy. And so there probably will be a bounce in April to May for wheat, and then another setback, and all of that can have something to do with pre-harvest as well as early harvest type pressure. Okay, but however, last I knew, nothing has changed from the Russia side of winter wheat. And so I think the world has really woke up. I'm not saying prices can't go higher, but I think they have to go lower first. I think all 3 markets need to go lower into March, maybe April, and then rebound, okay? All right, and then I still think we're going to see higher prices by summer, all 3 markets. Now, I've had some people contacting me, and I've been slow at returning calls and this and that. The question has been across the board, why don't I have any kind of price objective going into summer? Well, we finally got something for you. And what it's suggesting is I'm using the critical point of off a level 1 top, that top right there, and it's been triggered. So this is an official call, and this is such a rock solid up move that I don't mind calling it, even though the monthly chart is overbought, warning of overvaluation. It can stay overbought and overvalued for a while. I have an objective of 540s to 580s, and that may be all we will get this year, because the C model is warning that although yields can fall this year, it doesn't have to be a significant crop problem. That crop problem may be more likely in 2026, 2027, and the worst of a decade might not even show up to 2030, okay? Now, the R model is saying basically 1 to 3 crop issues, if not outright problem, meaning it might only be a small setback in yield and production, but could be major, anywhere from now to 2030, so not that helpful, just background information. It does send a message that there is a possibility the lowest price placed last year for this continuing chart is a major long-term bottom, that we've got a new decade bull market, and this thing's going up 100 to 400% this decade. Well, the problem is, most or all of that bull market could wait till near the end of this decade. So we might only get range trade for years to come. And this is only the earliest for that major bottom. And it should not occur for soybeans. So that is a warning. Soybeans might even be lower over the next 2 or 3 years than what they were last year, this year. And maybe that interferes with corn, and that it'll be a second or third opportunity to find that bottom in coming years. So the bottom line is, we might have a nice run up into summer here, see it come all the way back down for harvest where we're back to $4, $3.80, get it back into this green zone, okay, which in my opinion is long-term to super long-term, undervalued, dirt cheap. It's as bad as it was in the 1930s depression, okay? I think that's going to work for us for years to come as some kind of floor price. But I just have to warn you, this could be one of those years that maybe we get it to 540s, 580s, and we just don't find enough of a crop issue, maybe no crop issue at all, and just put it right back down, okay? Now, timing-wise, I have learned when looking, discovered this in global markets first, and then revisited U.S. markets. And you may recall last year when I thought we would get that crop problem, that it was the last year for the C model for the best forecast. Now the C model is revised. It's on something different, okay, because it didn't work. And I think it was for that particular pattern, might have been the only time it didn't work since 1866 when using USDA data. So it was an odd one, okay. What I've learned though, price-wise, we didn't find any kind of picking its head up into that long-term top. And I gave up and just said it is in a level 1 top. The model's fine with that. Go with it. But what's interesting is this level 1 top due now and perhaps into March could be the latest allowed for a minor long-term top. Now that would mean prices, if they were to top now in March, they're just going lower in the harvest. Well, that doesn't mean goes down immediately. It could be just sideways choppy, but it just wouldn't be able to go higher by summer. Well, that kind of implies a year of no crop problem whatsoever, not even a scare, not even a warning, okay? Well, that did occur in 2013, okay? We may yet do the same, but it seems unlikely to me. So I think this market is strong enough that it ought to move higher, at least into the start of the growing season, get higher into June. So I took a look at it and I said, well, what's that going to mean if it ever topped in June and went down into harvest? And what I learned is this level 1 top could do something. It's only about 10-15% probability, but it has occurred. It's occurred in my lifetime. I've seen it. I've traded it. What it could do is add the next level 2 top that probably is going to be due May, June. It could actually make that the more important level 1 top, and it extended the level 1 to latest allowed in terms of studying corn prices going back 200 years. So I thought to myself, you know what, maybe I could go to 540, 580s by May, June, and then you learn you got a good crop. That's just over and done with. It's down in harvest. And because that would be a long-term top, we then have to evaluate. First, that scared me. It might even be lower next year as well. No, what I learned is this long-term bottom as of August of last year, it could actually show up at harvest time this year. And then we can get on to maybe something more bullish in 26, 27. So we do want to look out for that. And anybody's concerned of how much do you want to play for the upside, you might want to consider that 540s, 580s might be the highest for the year. You also might want to consider in that May-June timeframe, if you're not seeing enough weather information to be bulled up, then maybe you got to be a bit cautious how you're going to play that and be a little more quick and nimble and short-oriented, and don't try to maximize profit. Just play some games with it, okay? Now, if it is a real crop problem, my guess is really this will be the level 1 top, and we'll later learn the next level 1 top was really July, August, even early September, depending on how serious the crop problem. In addition, if you bring in that Gleisberg cycle, then, man, we could have a serious crop problem and explode these prices, I don't know, $7 to even a record high, okay? It just depends how serious it is. And I don't know of any way of really forecasting it right now, just how serious it is. There's just not the information, data there. I think it's just too much of a game bowl. You got to be kind of a trend follower and just say, hey, just let it go as high as it can go. Nobody knows for sure. So we still have that possibility for a true crop problem this year. I just got to warn you, there's some things saying, yeah, it might be better to show up in 26, 27, okay? And then the most serious for the decade may not show up to 2030, but you could still get a serious one now in 26, 27. And you can also string it out every other year, some kind of a problem, or 2 years in a row, a problem. So we need to keep an eye on La Nina, how things are going in South America, how's the drought monitor map and various measurements in this country, what's going on over in Europe and China and stuff like that, to see how this builds, because this is one impressive up move right now, but it may actually be short-lived from here, stopping at 540s to 580s, okay? Now, something to consider, though, if we were to get a significant crop problem, it could be quite explosive because we have rebalanced supply and demand here a little bit, tightened things up. But I'm more interested in this price behavior. What I learned from many years ago, from 1866, using USDA data, identifying crop problems, overlaying it with these minor long-term, mid-size, and major long-term bull markets on the business cycle model, what I learned is the better bull markets off a crop problem always occurred when prices went up from harvest into May, June, on into summer. In other words, you already had to have a tighter supply and better demand going into summer, and then have the crop problem, and it just made everybody more excited, emotional, and then exploded the prices better. When you had weak prices into early of the year, you got only a small up move, even if you got a fairly, somewhat of a bad crop problem. It didn't go up much at all. It was because it was poor demand all the way along. And quite often, that was also a clue you really didn't get a crop problem. And probably should have paid more attention to that last year, because a year ago now, we were having ugly prices, and it was warning. We weren't going to get such a big bull market, but I wished I had thought of more in terms of maybe it's also a warning we're not even going to have a crop problem, and that's how it worked out. This one is not saying you're going to have a crop problem. It's just saying you're set up if you get one, it could be quite explosive. But if you don't get one, I wouldn't be surprised the highest price this year might be 540s, 580s. We'll take it one step at a time and see. And we do have to be concerned when we get into May, June, that may be the highest price of the year, and it just turns out to be a good crop after all, and just goes down into harvest. So do keep that in mind. I'll try to remind you from time to time of that. I think that's an important discovery here and feature that we should consider moving forward. All right, now let's take a look at what's going on in Brazil soybeans. And it is due for a level, it should actually be heading higher in March, April, into a level 2, pull back, and I need to, this has moved high enough that didn't update the chart to keep up with the model. That was a rare scenario to do that. There may be harvest pressure that just slams it right back down, so watch out. I may be making a mistake of doing this, but if this is correct, there's a good possibility what's really going on is this may yet be a level 2 as well. It's going to top out in April to May for Brazil, which may be a sign U.S. tops out May, June, we get a good crop, everything's down into fall. But I'm a little suspicious this is going higher for a few weeks yet, or at least stable. But as I look out into May, June, July, it can actually go higher into the next level 1. So it's not that supportive of the U.S. forecast, but it's not working against the U.S. forecast. I'm good with it. I like it. And let's face it, it is harvest time in Brazil, and we got prices actually going up as they're harvesting. So it's telling us it is low priced, but they have quite a bit of harvest yet to do. We're just getting started there, and Argentina's harvest is going to last quite a while. All right, Brazil corn looking very good. Level 2. It's in a larger level 1, and so I will make the forecast that it's going higher into probably late March on into April. That's different than what we have for the U.S., okay? But I'm okay with it. U.S. can still be higher into summer, and Brazil might even do something and run an extension there. but that's what I'm looking for. So this is supportive of U.S. Corn forecasts, and it's also supportive of China forecasts. All right, London feed wheat. Stalling out on me. Don't like that, and making me nervous of what if that idea of a minor long-term business cycle top latest allowed was just a dud. The best of it was probably actually in May of last year, but really probably topped there in October, maybe topping latest allowed now. That is a problem of lower into fall of this year, and at least for spring harvest, first crop wheat, that kind of thing. But for the moment, though, the model's saying it really ought to bounce by summer. So we'll still give it a chance. Australian wheat still looks weak to me. Apparently, some of the weather issues there aren't bad enough for wheat, or it's hubbing wheat. Don't fully understand the story there. I'm not too concerned. That's not interfering with the other markets. All right, this is the European wheat that's waking up yet again. They had a nice setback. It's working good. It could set back dip into March, probably in sympathy with the U.S., and then later, if it takes out the high of this month, it ought to be higher in April, May, and maybe that's all it's going to do for the year, because here again, I've learned I can move this long-term top that actually was about the only one that worked for me in the grains. There was other commodities had the same issues, but a few of those actually worked. That might be the minor long-term top for European wheat. Unfortunately, it may not be for U.S. corn and some of the other markets, okay? And we may learn we can move this over to here. So we do have to wonder, can something, especially on the economy side, can things blow up with this tariffs and we also get great crops and just make things very negative by the end of this year? That's a possibility. And the crop problem really is 26, 27 is a possibility. But for the moment, the model's saying it should still blip up by summer. It just may not be all that great. And but if it can trade above that price level and does it after June, then I'm suspicious even if they knock it down to harvest, it's actually going to be higher in 2026. It should be, or at least just as high. Ideally, it'll be higher. And that may even spill over into 2027. That could make for some interesting next few years here of crops and climate at least, but it also is bringing in potential inflation tariff stuff that at times might be bullish as well, even though I've got this knot in my stomach that we're really not, the inflation, if it does jump in this country, really isn't going to help commodities jump much. It's going to be more for the manufacturers on into the store and not for the producer, and that it can also kill demand and hurt the economy very quickly. And so it might be one of those straight up, straight down moves if that occurs. We've got to watch out for that. All right, so there can be definitely some confusing times going on here, but right at the moment, still looks like grains are going to go higher into summer. Now, some of the commodity indexes don't look that good to me. I'll see if I can bring those up in a moment, but let's move on to China corn, and it's in an uptrend, okay, and it just looks like to me that it can move a bit higher into a level 1 top yet. And I'm wondering, like the U.S., if it won't prove to be just a level 2 and it's moving higher into top into, say, May, June, and then it's all over. On the other hand, maybe it will be a level 1 very soon, but we still get a crop problem and find that we get a level 1 still higher yet in July, August. So all the twists and turns that we have to deal with every year of going into a crop problem. But right at the moment, it's fascinating that this indicator is moving lower and lower, and yet this market is still grinding higher. I think it's the indicator wrong, not the market. It's going to bottom, give a buy signal, move back up to overbought. There's still higher to come. But I got to warn you, I'll give it just 2 or 3 more weeks of up, then I think it is time to pull it back. It's somewhat in line with what we're looking at. With the U.S., I don't think it's going to interfere with the U.S. forecast. Let's put it that way. Let's go to China soybeans, number 2s, and it ought to swing up yet again into a level 1 top that may occur as soon as next week, but I can give it a few more weeks, and then it should pull back in level 2. This is also something similar to what we're looking at for the U.S. soybean market. So I think China and U.S. will kind of be on the same page. So I think the upside is rather limited here in the beans, but ideally it ought to be putting a level 3 bottom now, bounce by next week, maybe even in the following, but we then have to consider it puts in a more important level 2, level 1 tops on top of a level 3 top, and the indicator is already overbought, rolling over. It might be a leading indicator saying, yeah, this is just about over and done with for the soybeans here, and that they can back off. And I think this makes sense relative to Argentina, Brazil, the rest of South America harvest. And I think it makes sense relative to the U.S. and the trade wars and China trying not to buy from the U.S. Canola here for Canada, breaking out, looking really good. Tighter supply-demand balance sheet, maybe getting a little better exports in their own right. I think it's higher into summer, okay? And next up, let's see what's going on with the rapeseed in Europe. And even though it's struggling here, it may top long term and go down into harvest. Maybe Europe gets some relief, and yet the U.S. may still have a crop problem. The best forecast is to give it a chance to bounce or grind higher at least into summer. Okay, so I think that's rather supportive. I think the soy oil market, palm oil markets could be a little friendly for the grain bulls around the world. So I will leave that door open too to help for the upside into summer. All right, let's discuss some commodity index. We haven't done that in a while, and let's see what I can find. This is the Goldman Sachs Select Equal Weighted Index. It's breaking out. Bloomberg's commodity index looks similar. One of them. Others don't look this way. It's weird. Some of these indexes are not looking all that bullish. I am concerned this LT3 top last year really shows up now in the next few months, and commodities just don't really go anywhere this year and may yet go down. But for the moment, looks like correctly called that top, and I'm thinking, gosh, if it would ever break through that in the next few months, it could be quite exciting by summer how high it goes. And then what would be more exciting is if it can be up, if the commodity indexes and grains can be up after June. I'm thinking even if they pull back in the fall, and even crude oil can pull back in the fall with grains, I'm thinking it means even higher next year. All right, so unless, of course, we get an explosive, gigantic move in the grains, then it's probably down into next year and maybe the following year. But the oil market could actually be up in the next year. Some of the other commodities could be up in the next year, so that might provide some support for the index. This is probably, I guess that's just the same index here. But I was thinking the standard commodity Goldman Sachs index, it doesn't look as positive to me. So, we want to look over our shoulders, but it's looking encouraging here that we can get the commodities going. Now, this also could mean more inflation. Hey, we haven't looked at oats in a while. Still stagnant, but I say it's going to pop by summer here. Now, I still have, this is the CRB Bloomberg Commodity Index. And yeah, that one does not look so good to me. And I'm wondering, though, is it might be coming in, if it will go lower into next month, it might actually be coming into minor long-term bottom. And we might have the top correctly last year, or it's occurring now and just didn't work for any bounce whatsoever, okay? Or this is the bounce or something. So we'll keep an eye on it, but I think if this index swings back to 550, I think that's rather bullish going into summer. But right at the moment, it is one of those indexes warning, the commodity's looking better, but it doesn't have to last, is what I think it's telling us. Now, this is the foodstuffs, and it doesn't look all that good to me. All right, so again, there's some cracks across the board of commodities that if you look at the famous index, people are getting excited saying, ooh, they're going up. I got to buy some commodities. But then you look at some of the sub-indexes and you're saying, this might be a fake out up move. We need to be cautious going into summer as well. Okay, need to be looking over our shoulder. And this is the industrials, and it's not doing anything exciting, but right at the moment, that's probably just a pullback before going higher into summer. But it's, again, something we'll have to think about what might go wrong, even though we have a net bullish attitude going into summer, okay? And then this index is the fats and oils, and that kind of makes sense of what's going on. And I'm not too concerned with that yet. It can perk up going into summer, but again, it just tells us As always, there's bullish and bearish information. We're looking for the best bias. It looks like the best bias is bullish in the summer for many commodities, but there's cracks there saying, yeah, and you better watch out. Doesn't necessarily have to be higher in July, August for commodities, and it can be lower by late in the year. And there can be things that could make it very negative, especially if the U.S. runs into a recession, and it may be in a recession 2025, 2027. Don't know yet, just know it's on the table, and it hasn't been on the table since 1950s, maybe 1970s, and back in the 1800s. There's things to look over our shoulders. But right at the moment, feeling optimistic, at least the grains moving higher into the summer months. All right, now let's also take a look at what's going on with the dollar. And the dollar's backing off. That's also helped wheat. And this is a monthly chart, but I am concerned it should rebound somewhat into summer, at least into March. Maybe that'll bother the wheat here soon. And but I don't know how much it's going to bounce in the sense, can it ever hurt corn and soybeans? It doesn't seem like it may now actually be impacting soybeans a bit just because of the oversupply. So people get in this attitude of they become pessimistic, so they just keep looking for more and more pessimistic stuff. The corn market, on the other hand, is on an optimistic mode, so it might actually it is ignoring the dollar. Okay. And I realize the dollar is long-term overvalued, and it may have just placed a long-term top, but I'm a little nervous that something might happen this summer, spike it to a higher price this year yet, and then put the long-term top in and back off later. Right at the moment, I would say the dollar isn't really that important to the grains. All right, let's see if we can take a look at the drought monitor map. Okay, and there it is, and we still have basically some drought on the East Coast, all the way from Florida to Maine. That's impressive, okay? Coming into New York, a little bit in the central, a little bit of dryness there in central, but there's also some areas I know of have quite a bit of snow. And but what you want to watch is the Carolinas here being this dry, maybe a clue of a crop problem this year. Some people say it's really a clue for the next year. I don't know what to make of it. All I know is we've got some dryness and somewhat drought conditions already in the northern Midwest here, need it down a little further in the south. We have it all through the Southwest and the Texas drought. We have it up into the plains there. And looks like it's spreading this way. It looks like it's trying to connect there. And then let's go look at the data. And what we have is 32.6, so it's actually a little less dry in the prior week compared to the previous week. All right, but it's still off what it was in January, and it's still low. I mean, we have quite a bit of the nation that way, but it is fluctuating. It's not telling me whether it's ready to get worse or not, but let's keep an eye on La Nina. Of where we're going with that, and keep an eye on the news in terms of inflation, the wrecking of the government, the macro economy. At least ECB in Europe is lowering interest rates, and England lowered interest rates. And England actually, after they lowered their interest rates, got a better GDP number, so they may be recovering. China has some good news, but still is mixed to negative overall. And that can hold them back to how much commodities they really want to load up on. And then, of course, there is the trade war where they're going to continue to go to Brazil, Argentina, and others in South America more than the U.S., so do keep that in mind. All right, I think that pretty much wraps this up for the week. Past results are not necessarily indicative of future results. Have a great week. Thank you.